Morgan Housel now joins us. He's going to walk us through what is happening to the market behavior and how should investors react to this. Morgan, good morning. Thank you for joining us. Morgan, everyone's talking about unprecedented times, things which they've not seen in the last 20 years, 30 years, or even 40 years. What is your understanding? Do you think this is an emotional sell-off or this is a earnings stroke, a genuine slowdown based around recession?
Yeah, I think there's really no historical comparison to what we're dealing with right now. I think it in many ways exceeds what we dealt with during the Great Depression in the 1930s even, because that was a big decline in economic activity. This is a halt in economic activity across many regions across the world. So there's not a lot of precedent for what we're dealing with. I'm not a long-term pessimist by any means, but I think there's no doubt that we're going to be dealing with, at least in the next couple of months at a minimum, a very difficult period that really has no historical precedent.
Completely, of course, ignored the Fed's mega bailout plan. And clearly we're in the grip of unprecedented fear and panic. Do you see this actually just going from bad to worse?
Yeah, I think there's two things going on in terms of the Fed cutting and then markets still not rebounding or bouncing. One is that, the Fed cutting was probably the right decision, but it's not going to affect the actual cause of what's going on, which is not financial, it's not monetary, it's biology. So until the biological part of this gets solved, or at least is heading in the right direction, I don't think there's much in the way that policymakers can do to really stem that bleed. You also, just because, like I said earlier, we're just dealing with an unprecedented situation. You have investors and individuals all over the world who are saying, I just want cash right now. I don't know what my future looks like tomorrow, let alone a year from now. So equities that they may have held as long-term investments a week ago or a day ago, they're reconsidering right now. And so I think there's not really a lot that the Fed can do to add optimism right now. I think the only people who can add a lot of optimism are doctors and people working in laboratories that are hopefully, moving us in the right direction in the coming weeks.
Yeah, medical help right now definitely seems to be the need of the hour. So, Morgan, let's talk long term then. Do you think that we will actually be able to see a decent bounce back from the kind of global rout we're witnessing?
I think if you realize how quickly things have changed in the past few days, sometimes in the last few hours, nobody, and I truly mean no one, not a single person, can look ahead and say, this is what's going to happen over the coming weeks and months. Nobody can do that. If you have not been humbled in the past couple of weeks about your ability to forecast what's going to happen next, there's not a lot of hope for you as an economic forecaster. What makes me optimistic in the long run is that our capacity for innovation, our capacity for manufacturing, our capacity for good ideas and solving problems has not been diminished by this. And then so we will get back. But in terms of when that's going to occur, I don't think anyone can say with any sort of certainty. And what's really important right now for policymakers is to realize is that because our ability to innovate, our ability to manufacture, the economy's real engine of growth over time has not been hurt. What's really important is just to make sure that we're getting people through this period, whether that is bankruptcy mitigation, foreclosure mitigation, those type of things, just to make sure that people can survive financially and, of course, and survive in terms of health, of course, to get to the other side so that when we do get beyond this, whenever it is, we can jump back into our capacity to build and innovate and grow.
That was percent lower, and we've drifted even lower. So no, the SGX Nifty was sort of indicating a bit of a faulty start. While that steep fall may have gotten arrested, but we're on the brink of breaching that 9,000 mark. So in terms of levels, we're down 100 points right now, and we're about to breach 9,000 as well. The breadth also has turned negative. You've got a UPL which is down about 7%, Just Dial down 7%, Sun TV down 4.5%, HDFC is down 4%, Petronet LNG. The Bank Nifty in itself is pressured, as was the case yesterday. Today as well, it's down by about 2%. You've got an HDFC Bank which has slid another 3.5%. ICICI Bank, after that 8% fall that the stock saw yesterday alone, it's down about almost 2.6% or so. But Morgan, just wanted to chat about whether or not we're going to see a price-led or economy-led recovery first. Let's see if we look at the next 6 months from here.
Well, there's a very long history in terms of panic of markets both going too far on the downside. We know that in hindsight. We never know it in real time. But in hindsight, they almost always go way too far on the downside. And there's also a very long history of markets rebounding well before the real economy is rebounding on the ground. So I think if you are an investor who is saying, I'm going to wait until businesses are recovering, businesses are rebounding, the stock market's going to have rebounded way before that. I don't know when that's going to occur, whether that's a month from now or a year from now or more. I just have no idea when that's going to occur. But this was certainly true in 2008 when the stock market bottomed in March of 2009. But the real economy really didn't start improving until another 6 or 12 months after that. So that's always how it occurs. And that's why it's really important if you're a long-term investor not to be waiting for the economy to recover, but realizing that the stock market is going to overshoot on the way down and then recover much quicker than the real economy as it anticipates what's going to happen in the economy next.
Right. So, Morgan, are you buying at these levels? What essentially is your course of action?
I think what's important for all investors is just to take a look at your finances and see how much cash do I need to sleep well at night, given your own unique job security, your own bills, your own outlook on life. How much cash do you need to get a good night's sleep? That's the amount of cash you should have. And once you have that secured, then I think if investors are, dollar cost averaging into the market, as I recommend that most investors do all the time, I would have given that advice 2 weeks ago, 2 months ago, 2 years ago. Then I think that's a great thing to do. So that's what I'm doing with my own money. It's effectively what I've always done, which is I have a big cash, chunk to get me to sleep well at night, make sure that my family is secure and everything's going to be okay. And then after that, dollar cost averaging with the idea that I'm going to hold stocks for 10 or 20 or more years. And if you take that approach, then what's going to happen in the next 2 months is not really of much concern to what kind of value is going to be created over the next 10 or 20 years. So that's how I'm taking my own investing approach. There's a great quote that I love that is attributed to Dwight Eisenhower, famous U.S. president, who says he was once asked the definition of a military genius. And he said, the military genius is the man who can do the average thing when everyone else around him is losing his mind. And I think it's the exact same thing in investing, that if you can just do the average thing right now, that is about as good as you can hope for over time. So the average thing being not panicking, maybe dollar cost averaging over time, not taking any big, bold, rash decisions in either direction, I think is probably going to be the best course for most investors going forward.
So, Morgan, what sectors do you think have potential to outperform once the dust settles down? Because central bankers have created a lot of liquidity. New, bailout and stimulus packages are coming now.
Well, it's hard to say because the sectors that are likely going to face the biggest upheaval, whether that is oil or airlines, have also seen their stocks been battered by the most amount. So it's hard to say, these sectors are going to rebound quickest or by the highest degree, and therefore you should buy those companies. I'm much more of owning a slice of the global economy, owning a slice of capitalism, just through the most diversified means that I can. So for me, it's just buying U.S. global equities on a diversified, low-cost basis and owning the capacity to innovate over the next generation or two.
Okay, Morgan, let's throw in that enormous volatility that we've seen in crude and the kind of slide we're seeing on those prices as well. What's the extent of the impact you see there and the further dampening on the back of that?
Yeah, it's a big deal because oil has two things going against it right now. They have the general slowdown from the coronavirus that's hitting all sectors, but then they also have the dynamic from Saudi Arabia and Russia in terms of oil output and whatnot. And then you have, I guess I would say, a third headwind, which is that so many oil producers, particularly the smaller ones, very frequently here in the United States, are heavily indebted. So those three factors going against it is going to be a big deal. It's important that, as that starts having a big impact on oil output in terms of the United States, whether that's oil producers that it's for whom it's no longer economic to pump, or some of them will tragically get pushed out of business, that will have its own offsetting impact on output over time. So it's a very difficult time for the oil industry.
Okay. From your viewpoint in the US currently as well, what's the estimated risk that you're pricing in? I mean, we've already seen the slide, we've already seen the panic, we've seen, unprecedented, selling, of course, even given what we saw last night. What continues to be, the element of risk that people are looking at now?
Yeah, I've spent a fair part of this weekend speaking with some of my smarter friends, trying to get their impact on their take on what's going on. And I would say two things. I would say the range of their opinions is about as wide as it's ever been. I spoke with very smart friends who are extremely pessimistic. I spoke with smart friends who said, we're going to look at this 1 year from now and say, I can't believe how pessimistic we were. That was such an overreaction. And everything in between. So I got the whole range. One thing that I think is important to point out, and this is not to say that it can't get worse or lower from here, but I cannot think of any time in my life when there has been so little expectation of even slightly good news. It feels like no one is expecting any positive headline to come out. And I don't know when it's going to come out, but I know that over time it will. And when there's so little expectation of any good news whatsoever, whether that is good news on the biology front, whether that is progress in terms of a vaccine or treatments, or on the economic front, whether that is a massive government stimulus package, whatever it may be, there's so little expectation of either of those that is just interesting from a behavioral finance point of view, because what really matters in finance is not what's going on. It's what's going on within the expectations, within the context of what people expect. And people expect so little right now that I think if any good news starts to come out, whenever that might be, that's when I think you could have a big impact on the upside, not just in the markets, but just for people's overall optimism and well-being.
Yeah, you're right, Morgan, because the headlines day after day just seem to be so depressing. So any good news will certainly be lapped up. But at a time like this, do you think that perhaps from the policymakers' front, anything else could have been done around the world? You saw the Fed, they seem to have exhausted their ammunition. The ECB perhaps is looking at some ways to do so, while the Reserve Bank has been rather disappointing so far.
I think the Federal Reserve in the United States has done about all it can, all that it can be expected to do at this point after last night's massive moves. Now the pressure and the real responsibility is now on policymakers for a fiscal response. And I think we need a massive fiscal response. We need to treat this like the economic world war that it is, and have a massive fiscal response, maybe like we haven't seen, maybe since World War II. And as I said earlier, it really needs to be focused on foreclosure, bankruptcy mitigation, getting people over this hump, however long the hump is, so that when they get over it, they're not in a position that's going to prevent them from participating back in the innovation, the production, the manufacturing that moves economic growth over time. I also think the situation is serious enough that policymakers, even with all their partisan squabbles, their inability to get along, will look at this and say, this is a big deal. We need to hold hands and do this together and do what's right at the right time. So I'm optimistic that I'm positive that it needs to happen, and I'm optimistic that it's going to happen at some point in the near future, maybe as early as this week.
So what's the long-term opportunity then for the Indian markets once we do recover from this crash?
I think in a time like this, global markets really have this common denominator. So whether it is the United States or India or China or Europe, we're all being moved by the same forces, which is not how it typically works. Typically, in a normal economic time, the dynamics in India are very different than they are in the United States. Whereas right now, they're actually very similar. Everyone is just trying to figure out what's going on with COVID-19 and trying to, be responsible on the health front in terms of locking everyone down and quarantining everyone, but also mitigating what that's going to do in the United States. So that's kind of a non-answer to your question, but I feel like every economy in the world is being driven by the same factor right now. And therefore, my explanation of what I think is going to happen next is probably going to be similar in any country or geographic area that we look at right now.
What are the chances, Morgan, that this could go into a prolonged period of pain and we could get back to recession?
I think there's a few things to think about. One is that if you are an investor in the stock market, and this is always true, you should really be looking at a period of at least 10, if not 20 years in front of you. That's a very difficult thing to do, but that's what is really necessary to be a successful long-term investor. So within that context, if I'm looking at the next 10 or 20 years, would a very serious recession over the next year Does that change the dynamics of what I'm looking at over the next 10 to 20 years? No. But would I expect a very serious recession in the next year? Yes. I think almost certainly we're in one right now when you have a huge chunk of the global economy locked up in their homes effectively. So it's, those two things are not mutually exclusive, that we could have a very serious recession in the next year globally, but also that that does not forestall or should prevent you from being a long-term investor over the next 10 or 20 years. You really need to separate those two things. It's very difficult to do in real time because the long run is just a collection of short runs. So I can say I'm a long-term investor. I'm looking at the next 10 years, but I need to be able to endure and manage the short term, the next month, the next year, the next 5 years, to get myself to be able to really think about long-term investing and its true worth. So I would look at both of those. The idea that we're very likely going to have a very serious recession, but long-term, that does not derail long-term optimism in the slightest.
Okay, before I get back to Morgan for our last and final take, 9160, we're making a fair attempt at clawing back. That's where the Nifty futures are, and this is a gain of about 0.5%. And in the last 5 minutes that I last time looked at the screen, we've seen a big reversal when it comes to the market breadth. So 109 stocks now standing to the advances as opposed to just 32 odd to the red. Where is the recovery then coming in from? ONGC, that's put on a show of about almost 5%. It's surprising that metals are the ones which are actually rebounding hard. So you've got a Tata Steel holding up 5.25%. Hindalco is looking good. You've got Vedanta holding up. There's Reliance, which is holding up 3%. Maruti, M&M, ITC. You've also got IndusInd Bank, which is chipping in. And SBI as well is trying that recovery and trying to claw back, as is the case with Nestle and PPCL too. So fingers crossed, let's only hope we manage to pull through this one. But Morgan, before we let you go, how is it that you're managing the stress that the market is throwing up at us almost every day?
Let me give you three answers. One, the most honest is I would say, look, even though I think about this stuff for a living and this is what I do, I'm not going to pretend. I'm not going to sit here and pretend and say I'm all butterflies and roses. This is a scary time for everyone because I'm worried about my family's health. I'm worried about friends and family that are in a really tough economic position. So it's stressful for everyone, including me. Number two, I would say I think it's important to unplug once in a while. I went for a bike ride with my son this weekend, just being able to unplug, get off of Twitter, get off of the news cycle, and be able to enjoy life with your loved ones as responsibly as you can. And number three, I think if you're a student of history, then you know that a lot of short-term chaos and decline and scary times does not preclude long-term growth. If you just keep that context in mind and always remind yourself of that context about how much we've accomplished in the last 100 years across the global economy and how much chaos and upheaval has occurred during that growth, then I think it's just important context to keep in mind and remain optimistic.
Morgan, always great speaking with you, eternal optimist, and saying ride it out for the long run. Things have to get better eventually. Thanks so much for joining us on the show today.